the U.S. economic system has placed itself literally in front of a loaded cannon. We put Uncle Sam in front of a loaded cannon.
Hot topic on the docket today. We want to talk gold, and I'm talking big picture. We see $3,000 gold coming soon. We've got three reasons why we think it's going to happen, and we've got the guy to cover it. I'm talking about Byron King. He's a Harvard-trained geologist. He knows the metal mining markets, everything that we need to know for the story here. So let's get started here. We want to talk gold. Byron, what do we need to know, and what are three reasons why we could see $3,000 gold sooner than we think?
Okay, three reasons for $3,000 gold. I would say the first reason is that central banks across the world are buying gold. And so they are establishing a support price, a floor, you might say, for gold. The central banks are trying to de-risk in terms of how they hold their currencies, how they back their national currencies, and they're not buying corn, they're not buying copper, they're not buying tankers of oil, they're buying gold because gold is a universally recognized symbol of wealth, of store of wealth, of just backing to an entire monetary system. In the U.S., we've really been miseducated over decades as gold, the barbarous relic, and all that kind of sort of thing. Well, that's in the U.S., that's in kind of the Western world in many ways, but the rest of the world, the other 7.5 billion people, they seem to like gold. What do they know that we don't? So give them a little bit of credit. They're not stupid people out there. They're a lot of smart people, and central banks everywhere are buying gold. That's good for the price. Now, the bad news is that it hasn't really translated into the gold miners yet, but eventually it will. So when we see the gold go from that 2000-ish level to 21, 22, 23, when that starts to move, the gold miners have a real snapback effect coming. Another angle, and this is related to that, has to do with the de-dollarization across the world. For decades, the idea was that the dollar was the global reserve currency, and it still is in so many ways. The Russians can badmouth the dollar, the Chinese can badmouth the dollar, they can sell their bonds and all that stuff, but they still use them. The Russians can say, we don't have any U.S. bonds. No, but you still use dollars. We know that, but they do it, but they don't like it. And so, but there is a de-dollarization going on. We're starting to see countries make bilateral trade agreements in their own currencies. China and Brazil will trade in Chinese yuan and Brazilian real. Saudi and China will trade oil in Chinese yuan, and not use dollars. So every dollar that you don't need to buy a tanker full of oil is a dollar that is just out there that doesn't do any good. So it's going to migrate back here to the U.S. and go into some sort of an inflation angle. Buy more. It'll come back to the U.S. to buy real estate or buy something. And price the middle class out of owning a home, that kind of thing.
Let's dig into that, because that's big for the price of gold. And that's what we've been seeing for many months, probably, years. But with what we've seen in Ukraine and U.S. sanctions and the BRICS nations sort of coming together, can you dive in a little bit for someone that's not caught up on de-dollarization? What are some of those big moving parts that lead to the world, not us in the U.S., but the world just saying, we don't want or need these dollars. We don't want that part of the system.
I think the real dagger in the heart, so to speak, just the spear in the chest, had to do with the U.S. Seizing Russian national state assets at the beginning of the military operation in Ukraine. Russia moved into Ukraine, and it's like, oh, Russia, that's bad. We don't want you to. We're sanctioning you. And Russia had something like 300 billion or 400 billion with a B dollars worth of U.S. denominated assets, and the U.S. Treasury just seized them. It's like, nope, not yours anymore. We're seizing them. They froze them. Okay, it's it's not like there's a big stack of dollar bills or a big stack of bonds over here. No, it's all electronic. But they, in a legal sense, they seized Russian assets, and Russia looks at this and says, wait a minute, we're a sovereign nation. We're not just a sovereign nation, we're a superpower. We have nuclear weapons. We're big, we cover 11 time zones, and you just stole our stuff. You just stole our money. And if your US dollar, if your US legal system, if your whole US currency system is so fickle and so unreliable that just like something over, we roll tanks into another country, you're going to take all our money. We don't want anything to do with it. Well, you can say, well, that's just a Russian thing. That's only because of Putin and Russia. You can say that if you want, but the rest of the world looks at that and goes, whoa, if they can do that to Russia, which has nuclear weapons, they can do it to me. And I'm a small country. I'm just a little country. If I ever do something that makes those U.S. people mad at me, they're going to take all my stuff. So that really, I think, was the killer. That was the coup de grace, so to speak, to the dollar as an acceptable world currency. And then other things like kicking Russia out of the SWIFT system, the currency exchange system. And then you mentioned BRICS. I mean, Brazil, Russia, India, China, South Africa. It's this global alliance that's trying to kind of get away from Western dominance, U.S./Europe dominance, U.S., British, French, German dominance. And then recently, just a couple of months ago in August, they announced that they're going to bring all these new countries in. I call it BRICS OPEC, because the BRICS members will be Iran, a big oil producer, Saudi, a big oil producer, UAE, United Arab Emirates, a big oil producer. Russia is already, in the top 3 oil producers of the world. Brazil is a very significant oil producer. And then they're bringing in countries like Egypt, which controls the Suez Canal. There's your sea lines of communication. And Argentina, which you say, Argentina? Well, they control the South Atlantic, So you already got South Africa, which controls the sea lines around the southern part of the African continent. Now you've got Argentina and Brazil, which controls the whole South Atlantic. BRICS/OPEC is a developing global alliance. I mean, think, it's not NATO, it's not the Warsaw Pact, but BRICS OPEC is an economic, industrial, political alliance designed to resist, the dominance of the global north, the dominance of the U.S. and Europe, so to speak.
Yeah, that's very well put. So, and we've been seeing that just get louder and louder. Like you said a few months ago, BRICS adding some more nations in, and it's very strategic, and it has to do with oil and different things just for logistics and these countries trading together. But when you really come down to it, it's a big nod towards de-dollarization and these countries not needing the US dollar anymore. Okay, so Byron, we've got central banks buying gold. We've got, in general, the dollar having less demand. So when the dollar has less demand, the globe needs something to back its currency. There's a lot of people turning towards gold. What are some other reasons that right now is the time? Because we've been talking about gold for years, but right now it seems like the time. We're seeing a lot of the charts, technicals point towards some big jumps in gold. So heading towards $3,000. What's another reason why you like gold right now?
Not every event happens overnight. It's not like you go to bed one night, you wake up the next morning, and you check the news and, oh, look, But we are now in a world of let's call it the world of 5%, interest rates. This is not the world of zero interest rates that we had for 10 years, and a lot of bad things happen at 5%. A lot of good things happen at 5% too. Depends on how you look at it. At 5%, a lot of the really dumb, stupid, incredibly foolish ideas that were never going to work are absolutely demonstrated that they're not going to work, and they go away. They wind up in bankruptcy court. And that's not a bad thing. But at the same time, the United States, the U.S. government, the U.S. economic system has placed itself literally in front of a loaded cannon. We put Uncle Sam in front of a loaded cannon, and he's pulling that lanyard there. He's going to fire that gun, And what do I mean by that? Well, what I mean by that is that in the olden days, we didn't have $33 trillion of national debt. Now we do. And when you start to roll over your national debt, and you go from these 0 and 1 and 2%, interest rates you're paying to 5% and more. Next thing you know, the U.S. government has to pay on its bonds a lot of interest that it didn't used to have. And we're at the point where when you look at the curve the curve of interest being paid has been going up, 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 and now it's spiking up. It's this rocket ship trajectory, almost straight up. And we're at a point where interest on the national debt is about the same as the Defense Department budget. It's $800 billion a year. Well, that's a lot of money. We are approaching a point where the entire tax receipts of the federal government, all those income taxes you pay, all those taxes are going to go out as interest. And then, but then, how do we fund the government? Well, we do that with debt, more debt. And it's sort of it gets into this Weimar-ish, hyperinflation-ish sort of thing. We're in the early inning of an inflationary time. I mean, we can say, oh, we had 10% inflation a couple of years ago. Now it's down to 4%. Yeah, 4% if you exclude energy, food, housing, things that people need, stuff like that. And if you discount the lower quality of other things that you get, can you buy a pair of shoes today that are as good as the shoes from 30 years ago? Those kind of things. So that's another reason why why gold should be going up, or ought to be going up, will be going up, is as a preservation of value over time. I mean, we're killing the dollar with we have no national budget, we have no federal budget. We run the country on these continuing resolutions. Congress says, oh yeah, here's $3 trillion to do whatever you want with. There's no accounting. There's no line items anymore. They just sort of, whatever you were spending last year, here it is some more. Here's another 10% or whatever. And there's no budgeting. There's no accountability. There's no method to the madness. We're just spend. And then a lot of U.S. government spending is just automatic. Social Security, that gets paid. Medicare, that gets paid. Whatever the number is, here's a check. Whatever. And so we're at this point where we really are beginning to see things go from sort of a general rise to sort of like a parabolic, like a rocket ship rise in terms of the outlays, and very, very bad for the purchasing power of your dollars. I mean,
I'll bring up a visual just in case anyone at home has not seen this.
Oh, yeah.
This is the old U.S. national debt clock, and again, I remember, Byron, we've been working together for many years. And absolutely. I mean, this thing was, I think if I would have blinked and said, what was it? Like not now, I obviously know we're here, but it's like, I remember it being, the U.S. national debt being 13 trillion. And that was crazy. Oh my gosh, 13 trillion. We're never going to be able to pay it back. We're going to have to monetize the debt, which basically means you're just going to print more dollars and make them less valuable. So then you can pay off your debt and all this interest that you owe. And now we're almost 3x that. I mean, $33 trillion, again, I'm not going to get into math, and you can see the math is all these crazy numbers, but they just keep going up. And the only way to really pay this kind of stuff back is, one, you got to tighten your budget, which you just said Congress is not going to do. That's just not happening. The only other way to do it is if you're paying it back with dollars that are worth less money over time. And that, just to get back to your point, how do you protect yourself and your family's wealth and all that stuff from that? It's things like gold, getting away from the system, because that debt is going to get paid, or it's going to keep ramping up. And the only thing that benefits is that, the dollar's value erodes away or inflates out of control. And then the debt's not that bad because it's all made up money. And, but everyone at home, your purchasing power is gone. And the only way to preserve that is something like gold. So
if you look back 100 years, I mean, very, very, very few people live to be 100, but if you look back 100 years to when your grandfather or grandmother was around, I mean, people used a $20 gold piece, a little coin was made of not quite an ounce, like 0.92 ounces of gold in a $20 gold piece. So you basically, an ounce of gold was $20. This is 100 years ago. Well, today, an ounce of gold is 2,000-ish bucks, so okay, 100 change times 100 change it, you've lost 99% of the value of a dollar in 100 years. So what happens to your $2,000 gold today? I mean, your $2,000 gold, it would not take much in terms of losing purchasing power of the dollar. It would not take much at all for that $2,000 gold to be 2,200, 2,400, 3,000. Our friend Jim Rickards likes to say that if you took the U.S. money supply right now, the currency supply of M1, M2, M3, that the Federal Reserve has under its,
Yeah, I
purview.
think he adds in the globe. If he's just saying sort of like all the
Everything.
money of the globe.
If you took it all and you backed it with, I think, 40% gold, you would have a gold price of something like, I don't know, $20,000 an ounce or something like that. I mean, it's just eye-popping numbers from our perspective right now. In 3 years, 5 years, 10 years, we'll look back on this and say, "Oh yeah, those were the good old days, man. $2,000 gold. Oh yeah, well, I wish I'd have bought some."
Byron, why don't we get a little bit deeper into sort of the investment space around
Mhm.
gold? Say gold goes to $3,000. Again, the charts are pointing that way. There, we got a bunch of support. Everything's looking good at 2,000. It looks like it's heading in onto a springboard. So if it goes to 3,000, what do you like? And more in the safety way, right? Like some of the maybe big miners, ETFs. When you're looking at stuff, because you've been mines all over the world, silver, gold. You've been through investing for decades. Like, what do you look at when you want to get into gold and play that upside?
But if you're new to it, I'm gonna give you a scenario here. If you've watched the stock markets for the last so many years, oh, technology, tech, all the Microsoft and Amazon and Apple and Tesla and Nvidia, these flavors of the month. I mean, we have a Standard and Poor's 500, of which 10 or 15 stocks are the big names, and like 485 stocks go nowhere, but that's sort of that's how it's all rigged. That's how the news media rigs it. If just a little bit of that technology money that people are starting to take off the table now, they're selling their Tesla, they're selling their Nvidia, they're selling their Apple, they're taking some of that money. If just a little bit of that money migrates over into the gold mining space, for example, um, in terms of the investable companies, the companies that hedge funds and the big pension funds and stuff, in terms of what they can buy into, they can't buy these tiny little micro cap stocks or tiny little cap stocks out there. That I mean, I follow the small guys, but I follow the big guys too. So they're going to go to the usual names, the usual suspect. Barrick Gold, Barrick, Newmont, NEM, Newmont. They're going to go to Agnico Eagle, AEM, Agnico Eagle, fabulous company, beautifully run company. Sort of a very strong, very high level intermediate company. So I mean, those are three names right there. Other companies that you might not think are big gold miners actually are. I mean, a company like Rio Tinto, a company like Freeport McMoran. Rio
Mhm.
Tinto mines copper, and Freeport they mine copper. But what else do you get when you mine copper? Well, you get gold, you get silver, you get a whole lot of other things too. But so those are great big names that I think have a very low probability of downside and a very high opportunity on the upside in the event of when the event of the rising price of gold kicks in. I think I mentioned earlier that central banks are buying gold, which supports the gold price, and that's nice. But the gold miners haven't really been they haven't been attracted to that gravity yet. But there's going to be that pull eventually. People are going to see what's going on. And mining companies, they're subject to inflation like everybody. The price of diesel, the price of labor, the price of concrete and steel, the price of chemicals. I mean, everybody's got these problems. But at least at the end of the day, with a gold miner or big copper miner that produces gold, you got gold. They're producing something real that people, central banks want to buy, and a lot of people in the rest of the world want to buy it as well.
Yeah. So one of the comments that we get is, and this kind of relates back to someone we know well, sort of the ultimate resource insider, Rick Rule. He always says this line that says, "I buy gold out of fear. I buy silver out of greed." Question we see all the time is always about silver. Everyone wants to know about silver. So what if someone's saying, okay, I think gold might go up, maybe it goes to 3,000, whatever. That probably means silver is going to be on a rocket ship ride as well. What do you like? Are there any like bigger companies? Like if someone wants to get into investing in silver in the same way as gold, what would be a company that you like there?
Well, a couple of names. I mean, the one silver play that that pops right in the top of my head is Pan American Silver. But another really nice way to play silver and gold and other metals is through the Sprott, SPROTT, different vehicles. There's Sprott physical silver, Sprott physical gold. whereas Sprott of Toronto, Ontario, Canada, Sprott actually buys bars of silver and gold. They store them in the Canadian Mint. They're not stored in some Joe's garage down the street or something. They're stored in the Canadian Mint. So you can buy gold, you can buy silver through that. And then Sprott has different mining funds. There's the Sprott, gold mining fund, which is gold and silver. There's the Sprott Junior Gold Fund, which is, again, it's gold, silver, but smaller companies. And again, it's very well managed, highly professionally managed. So they take the stock picking angle out of it. They take that away from you. They do the stock picking. They do the monitoring. They follow the companies. They listen to the conference calls and all that sort of stuff. They do all the back office hard work. And all you have to do is just sort of hang on and just kind of watch the price of gold, watch the price of silver. And as that goes up, these companies, tend to benefit.
Yeah, that becomes very important. If everyone starts wanting gold and silver, you don't want the paper stuff that has no backing. The things like Sprott, they have the actual metal, so there's some value behind the scenes, and it kind of gets into the crypto market, right? Some of those cryptos, they had nothing back in it. This is a physical vault of silver and gold, which is a really nice thing to have behind your back. Well, Byron, I appreciate it, and I think everyone else does. I mean, I'll say this: we worked together. This was like 06, 07, when we had some predictions out there that we were saying, oh, gold's going to be at $2,000. And that was, I mean, I think people laughed back then. It was like, gold's 500, 600, $700 an ounce. And then here we are, we're at 2,000. And right now, 3,000 isn't even that bold of a claim, but you get into some of that math that Jim Rickards is saying, you could be in the $5, $10, $15, $20,000 range for gold. And we say it all the time. Byron, you're one of the people that taught me how to understand gold and get into looking at it as a safe investment and protection for inflation. But the time to get it is now, because you don't want to wake up one day and find out that everyone has their gold, because at that point you're not going to be able to get it. It's the stocks and ETFs are going to be going bonkers. The physical is going to be out of supply. Like we've seen that over the years we've worked together. Mints will just run out because there's only so much.
Let me give you an example of a metal right now that's just soaring due to physical scarcity, and it was in the dirt for 10 years. It's called uranium. Uranium, after the Fukushima Japan nuclear disaster back in 2011, uranium just fell off a cliff. I mean, you couldn't give that stuff away. The uranium miners, uranium plays, they were awful. They hated, they were shunned, And it took years and years and years and years and years until about, I'd say, within the last, say, 8 or 10 months, if you look at it, uranium was selling at, or yellow cake was selling at like $25 a pound or so. And it was drifting up. It's up around $75 now. There is a physical shortage. The people who buy uranium, they go to the producers, okay, we want some uranium. Sorry, we don't have any. What do you mean you don't have any? We don't have any. Oh, well, raise the price, When you hit that physical shortage of metal, that's when the prices really start to kick off. And that's uranium, which is a highly controlled market. If you're just like Joe Civilian out there, Susie Civilian out there, you're not going to buy any uranium. You don't buy uranium. You don't buy you can buy uranium miner, but you're not buying metallic uranium. When something like that happens with gold, though, you can buy gold, you can buy silver, you can have the physical, or you can do a Sprott and have the physical trust sort of a thing. But there's going to come a time when people are going to be lining up saying, "Oh, I want some gold, I want some silver," and the miners are going to say, "Oh, sorry guys, we're sold out. It's all it's all allocated, it's all committed." And it's like you'll be chasing momentum, So don't chase momentum. It's get in front of it. Get ahead of it.
All right, Byron, one more question for you. We got comments. So what you've got on your background? I know it's a virtual background because you're traveling right now, but give us the story. What's in the background behind you?
These are the head frames of old copper and silver mines in Butte, Montana. Butte, Montana is one of a classic Americana mining district out in the mountains of western Montana. These head frames were built to access the mines down below. It was a big, huge. When they first discovered the minerals here in the 1860s in Butte, they were looking for silver, but there was too much copper, and that screwed up the metallurgy. So then they said, well, let's go for the copper. But then they had all this silver. but between the copper and the silver, Butte, Montana, was a fabulous mining district for decades and decades, and it still is. There's a lot of new exploration in that vicinity. Companies that I've followed, small companies, but these head frames I think are very symbolic because we live in this world where you just sort of see what you see, but it's the head frame that allows you to pull the valuable stuff out. I like to think that that paradigm, what Matt, what you do, what we do, what our editors do, what our staff does. I like to think that in this world of just noise, we're trying to pull out the important stuff. We're trying to pull out the valuable stuff, present it to the readers and the viewers and the people who want to watch us and want to read us and find out what we have to say. We want to give you the valuable ideas and the valuable information.
I can't say any better, Byron. So I'm going to leave it at that. We appreciate your time. If anyone has any more comments, just send them below. We'll be getting to them in upcoming videos and we'll go from there. Byron, thanks so much for your time and thanks everyone for tuning in. We appreciate it.
Okay, everybody. Thank you for being here. We really appreciate that you share your time with us.